Hey all, welcome to Share Trek. This is Raj here. Looking forward to the weekend. I hope you guys have a great weekend. It's a time to just relax a little bit. Things have not been that great of late. I've been watching the stock market. The few days have been encouraging. There's a bit of greens in there. I haven't touched my portfolio for quite a while, but now I have started working on my taxes. So I had to go through the unpleasant experience of looking at all the losses that I have piled up over the year. I'm just concerned about the debt ceiling, and that's the topic of my discussion today. So let's get started. Welcome back, friends. The market looks good from time to time, but I'm focused on the debt ceiling drama, which is due to unfold. It happens regularly, and the ceiling is always lifted after some theatrics and a bit of horse trading. This is what has happened usually. And after the debt ceiling is lifted, we always feel that it was a unwanted drama, and it's like a childish theater being staged. Recently, I think it was yesterday, Janet Yellen, the Treasury Secretary, wrote to the House Speaker, Kevin McCarthy, conveying the state of play with the government debt. She said the Treasury can take some measures like withholding some investments from retirement funds of postal workers and other federal workers right now, and to make it whole when the debt ceiling is increased or suspended. As per Janet Yellen, mid-June is the outer limit of waiting for a resolution on the debt ceiling, at which time a resolution is needed to either suspend the debt ceiling or authorize a raise of debt ceiling, because her extraordinary measures that she mentioned and any other tricks that she can summon will not help avoid the default beyond mid-June. So that's the statement from Janet Yellen. On the other hand, the Biden White House feels that negotiations can begin in earnest only after mid-April, when tax receipts will be firmed up and actual deficit position is available. Now, the key word out here is negotiations can begin in earnest. Because on the other hand, the Biden White House is saying that they want a no strings attached lifting of the ceiling, which I think is nice to ask, but it's not going to happen. Other outside players have estimated that ultimate D-Day is early third quarter of this year. Maybe Janet Yellen is creating a buffer of 3 months and providing a limited window after April tax revenue estimate, within which she expects the White House and the Congress to negotiate and get the ceiling lifted. Meanwhile, Kevin McCarthy and his team have signaled that they would negotiate spending cuts in exchange for lifting the debt ceiling. So this is the state of play at this point of time at a very, very early stage. And as I mentioned earlier, with responsible parties on both sides of the aisle, lifting the debt ceiling becomes an opportunity to negotiate policy objectives which are responsible and compromises that are responsible in order to move forward. Right now, what we have is one party that is behaving irresponsibly and does not seem to understand economics or science, and believes in their own fantasy world of alternative facts and priorities. At least that's the way it looks to me from here. That is why I'm concerned about a default, because they probably would not comprehend the ramifications of a default. Here is what would happen if the debt ceiling is not raised by mid-June, if Janet Yellen is right about mid-June being the drop dead date. The short-term deficit to investment in the pension funds of postal workers and other federal employees will not be made good, and further deficits in investment in their pension funds will start to accrue. We are talking about pension funds here. People work a lifetime and expect pensions to pay for their retirement and the golden years. A very, very serious matter indeed, something that can't be taken lightly. And these are the same pensioners who are going to vote in the next election cycle. So both the parties need to take this very, very seriously. The other casualty will be payments made by government to citizens, like Medicare disbursements, to healthcare providers, social security checks, and childcare tax credits. If healthcare providers don't get paid, they will let go of employees. If social security checks are not paid, food banks will have a hard time helping those that depend on social security checks. Disability payments to military personnel would get delayed. Social security checks average around $1,600 per month. Disability benefits to veterans is around $900 per month. Further payments to contractors will be stopped, and services from contractors may continue short period of time on goodwill basis, as they did last time when the shutdown was averted. But everything has a limit. After a point, the contractors will not be able to carry the liability, so they will have to stop the services. They will let go of their own employees. So unemployment is likely to go up, and the government may lose valuable services that contractors provide, and along with that valuable experience of working for the government. We could see active military personnel getting their salary checks delayed. Military pension funds may stand to lose annual payment from government and defense contractors that provide technology and equipment, as well as services, would find their payments delayed. This may not only hit construction and other activities, but also working of military bases. The government is a major employer both directly and indirectly. As government stops spending and paying its dues, it would see a whole lot of industries downstream feel the pinch, and they in turn will let go their employees, and this could accelerate unemployment across the board and cause us to move towards recession. The impact can be also on the stock market, which would be in a terrible situation in such an environment, because the bottom lines of listed companies will feel a strong impact, and as a result, valuations will drop further. I think depending on the duration of such default, the stock market could potentially drop 25 to 30%, as it was seen in the past somewhere in 2011. I think between April to August of 2011, when US was in a similar situation, the S&P 500 dropped almost 31% and recovered only halfway from the drop by the end of the year after the debt ceiling was resolved. One silver lining, if that happens, is that if a recession is ushered in quickly due to the debt ceiling issues, then the Fed will have to drop interest rates and bring in easy money policies in order to revive the economy. On the other hand, the sheen will be wiped off the US Treasury, and the world would increasingly be wary of US government and its ability to manage its debts. The credit rating for the nation will drop and would make borrowing more expensive in the future. It will also weaken the US dollar. Then this contagion will spread across the globe, because there are many countries that use US dollar as their national currency, and this will cause their import to become more expensive. Countries that have weaker currency and a weak economy will also feel the pain as a result of the turmoil that will ensue. Companies or parties that had hedged their US dollar payments in long-term US dollar denominated contracts will not find any impacts, but those that failed to hedge their US dollar positions will suddenly find their profitability hit due to the weaker US dollars. In the current environment, there is not much of a danger of US dollar losing its reserve currency status, because Russia, China, and European Union all have their own problems. Even Britain has got problems which are severe. So there is no danger of US dollar losing its position as reserve currency. However, I'm thinking that gold and Bitcoin could see a strong bounce in value in this kind of eventuality. So here is what I am thinking, and friends, this is not investment advice. I am just thinking out aloud and would like to know what you guys think about it. I think that Kevin McCarthy is incapable of getting his house in order. We have seen that even for the governor, for the speaker position, he had to go through 14 votes, and it was a big drama. We'll have intense drama and potentially a short period of default, which would be similar to the feel that we had when we had 14 votes taken for speaker election spanning over 2 days. What that will do to the market is that it will tank the stock market 25 to 30% at least. I would therefore seriously consider selling my holdings, even if they have accrued losses, so that I can re-enter at the bottom and recover some of my accrued losses. I may not do it on the entire portfolio, but would not hesitate to do that with my genomic portfolio, as the segment I think is most sensitive to the tight economic condition and the short cash runway that they have. So they are likely to be disproportionately hit by this kind of a scenario. That's my personal opinion. Well, friends, before we wind up for the day, I thought that it's good to have a look at our indices and see where the market is. Not much is going to matter because I think we are going to be in a sideways movement until this debt ceiling crisis is resolved. That's my feeling. The intermittent distractions would be whatever the Fed says about the interest rates. I think out here in Canada, the sentiment is that there will be interest rates hike continuing despite any factors because the inflation has to be brought down. And Canada mirrors US to a good extent. So I think the US Fed might also possibly be on the same track. They may have a slightly less increase, but interest rate is going to go up. There is not going to be any cut in interest rates. So I think all these stimulus will keep on moving the index between two ranges. We'll try to identify those ranges, and there'll be a wide range so that we can feel that the market has gone down and then it has gone up. But basically, it's going to stay range bound. That is my feeling. We'll justify that when we look at the chart. So let's go and have a look at the TradingView platform. Here we are in the TradingView platform. I would like to first look at the futures. And Nasdaq futures are at this point of time showing 0.64% gain, and they are still in a bear channel. As you can see, this diagonal red line, it shows that we are still in a bear channel, so this doesn't say much to us. It could hit that and come back down again. Now let's look at the indicators. In the indicators, I'm looking at US oil. Again, US oil is in a bear channel. It's just about ready to break out from here. And this green line that you see here is where it ended today at $80. So there is a chance that it could break above this diagonal line of resistance because MACD is bullish and momentum is also higher. But in the event of a recession, I expect oil prices to continue falling down. Next, let's look at QQQ. QQQ has broken past the line of resistance, and I think that what is likely to happen, this is what is my current hypothesis. You see this thick blue line here and another thick blue line out here. I've drawn these two lines as two bounds between which the QQQ is likely to bounce. And if you look at the price levels out there, the upper bound is 297.03. And the lower bound is around 259.94. So if I took a measuring widget and drew a line from there all the way up to here, we're talking about a 12 to 13% variance in price. That's the range in which it's likely to move because it's not respecting any of these resistances. I had more resistance lines out here which I removed. MACD is bullish right now. Momentum is also pretty good. The next test for it on Monday is, or on the next trading day is going to be 282.10, which is the resistance. S&P 500 is still in a bear channel. If you look at the bigger context, you can see that. So it's a test. It could probably go up a little bit and then come back down and settle inside this bear channel. We don't know. We'll have to see what happens. But right now, everything is poised for it to break through above this diagonal line of resistance. Russell Index is also quite buoyant. It has broken past this diagonal line of resistance. It's out of the bear market. And if I was to link the bottoms out here, then I would say that it's creating a bull channel of its own. We'll have to see whether it's able to break through the resistance at 191.38. Right now, all indications are that it's got more steam in it because the MACD is bullish. However, the momentum has got a little way to run before it becomes overbought. So it could potentially go all the way up to 189, I suspect, and then it may probably have to give up some gains, move sidewards for the RSI to cool off and then move up again if it was to continue in that trajectory. Dow Jones is up 0.30%, and it's clearly broken past the bear channel. So I have made the line of resistance of the bear channel into a line of support. Right now, what I want to see is that the price action goes above our previous high out here, which was at around 348.84. If that happens, then I think we'll be starting a new bull channel. But till then, we'll have to wait and see, because that's what will show us the direction. MACD is bullish right now. Momentum is also pretty good. There's plenty of room for it to go up further. Then if you look at the VIX has dropped significantly, and it has in the process it has converted resistance at 19.75 into support at 19.75 into a resistance, and it has also converted support at 18.57 into a resistance. So VIX is looking pretty good, but friends, my spidey sense says that this is just a head fake. Things are going to change, because overall everything is not looking that rosy, because we already have this problem with high interest rates and potential hikes by the Fed. We also have this debt ceiling crisis looming. And in the Russia-Ukraine war front now, Belarus is likely to be dragged into it, and the war theater is likely to expand. So those things are also going on out there. So overall, I don't think this VIX will stay lower for much longer. In the past also it has come down and then it has bounced off. So we have to see whether this drop below 18.57 is a head fake, and that tomorrow it starts going up. I mean, on the next trading day it starts moving upwards. That's a very strong possibility. Right now the MACD is bearish and the momentum has fallen. But if you look at the US dollar index here, you will see that the US dollar index has been steadily falling. And if the debt ceiling issue keeps dragging up again and again, you'll see further fall in the US dollar index, which is ideally supposed to be good for stocks and the other asset classes, which is probably why we are seeing good improvement in the indices and our scripts. But I would be very careful in this kind of an environment. That said, I think I would like to go and have a look at commodities. And in commodities, you'll see gold has improved significantly. Gold has picked up a lot of value. And if you were to go and have a look at crypto, you will see Bitcoin has shown a very amazing gain. We could have had a cup and handle pattern, but it's gone beyond that. It did not need any handle. It's just decided to go ahead. So next challenge is going to be 20,233. If it crosses that, then we'll be really strong. But right now you can see the RSI is overheated, so there is going to be a little bit of cooling off before it moves up further. So that's my opinion out there. Now let's go and have a look at our index movers, as I call them. These are core technology stocks which are capable of moving the Nasdaq. So first I'm looking at Microsoft. Microsoft has staged a nice steady recovery, and it has closed all the gaps out here. So it's starting to look healthy again. MACD is bullish. Momentum is also above average. It seems to be supporting the index. Apple has also done a very neat recovery without any gaps. MACD is bullish and it's also looking good. And we have our earnings coming up somewhere in February 2nd. Let us see. Microsoft earnings is due very soon. It's due on 24th of January. So these earning results will also have an impact on the movement of the indices. Some experts feel that the fourth quarter of 2022 would have a lackluster performance. So let us see what these big giants do for us. And then here you can see Amazon has also neatly gained. RSI still has way to go, so Amazon can pick up a little more. Google also has done very well, and it has done it in a systematic manner without any jerky movements as such. So MACD is bullish. Momentum also has plenty of way to run through. So overall, I think the index movers are looking pretty healthy. And as soon as the Q3 results start coming in, we'll see the direction that the market is likely to take. But overall, it's going to be always underpinned by the drama of the debt ceiling, the Russia-Ukraine war, and the Fed actions. We can't afford to forget those things. Now let us go and have a look at our genomics shares. The best performing share as of Friday was Invitae, which went up 6.84%. And 4 days ago, Invitae had said that they are expecting lower Q4 revenue and higher revenue for full year of 2022. So I think this move is just on basis of higher revenue. We can't be sure, but it's on a bull track at this point of time. It seems to be moving sharply, and if it crosses 2.56, then this will be a serious move for Invite. I'm just going to mark this as a support before I move away from here. MACD is bullish, and there is plenty of room on the RSI to move further, and their earnings are due on the 13th of February 2023. SQZ Biotech has been doing phenomenally well. It has been moving significantly up in the last 2 trading sessions. The momentum has also improved. MACD has become positive, but momentum has to increase a little more. Right now, I'd just watch what's happening with SQZ. The share can move erratically. It's been very weak for a long time, and let us see if there's any catalyst news. On December 6th is when we had the last news, so no new catalysts out here. Let's look at Illumina. Illumina has got strong headwinds, so I'm really surprised how they managed to eke out a positive, because first of all they have downgraded their revenue prospects, and then we have the 10% fine penalty from European Union antitrust on the global income. So this is a misnomer. I would expect us to move and test the support at around 180.79. MACD is still bullish, but momentum is just about at 50. IMTX is doing well, and I think it's trying to break through this resistance at 8.80. In our next trading day, we'll see whether it's able to do it or not. I'm just going to thicken the line so that you can see it out there. I'm going to mark this also as a resistance. We haven't done technical analysis for a week, so I'm just updating the charts. And our MACD is bullish out here, but momentum is not adequate. And if you look at the next one, which is going to be DNA. DNA has made sharp recovery. I wish I had bought it at 1.51 or 1.52. I couldn't get to my trading terminal, and I couldn't place the orders. I do regret it, or else I'd have made a handsome sum of money right now. It's looking pretty strong at this point of time. Let us see if there is any new catalyst. Ginkgo Bioworks Holding expect total revenue of 460 to 480 million in 2022. 1.3 billion cash equivalents. Expect to meet 2022 guidance ranges for total revenue and new cell programs. FY22 revenue view 470.8 million. So I think they are in line with the analyst expectations. So there is no surprises out there, and that's the reason why I think it's a relief rally. I'm going to convert this resistance into a support because we have broken above it. There's plenty of room for DNA to move, but whether it will move is the big question, because they had done equity dilution also. We have to remember that, and we'll see what happens out there. Next, I would go to CRISPR Therapeutics, which was up 0.56% on Friday, and MACD is bullish. Momentum is also above average. CRISPR Therapeutics is moving steadily upwards. It was on a bear channel, then it bounced back, and now it has converted this resistance, which was at 47.93 into support. So I'm going to mark it as a support. Our next resistance here is at 50.83, failing which we have another resistance which is coming at 52.13. And I'm just going to reinstate the simple moving averages. So you can see that we have a resistance from our 50-day simple moving average, which is this thick orange line. So the resistance out here is pretty strong. 50-day simple moving average is at 50.34. So that's the first level of resistance, and next level of resistance is around 50.83. So that region is going to be difficult to penetrate. If CRISPR manages to break past that, then we'll be in a better shape. And then if you look at PSCB, it's been doing phenomenally. PSCB has done very well, and MACD is also bullish. Momentum has got a little more room to run before it gets overbought. In terms of news catalyst, there is no new catalyst except for news 4 days ago that Pacific Bio teams up with University of Tokyo for bioinformatics project, and that's about it. And next, let us look at Beam Therapeutics, which has done a weak performance as of Friday, but it's still overall in the week it has improved a lot. MACD is bullish. Momentum is also above average, but a bit flat. So Beam Therapeutics is still looking weak to me. I think it's still in a bear channel. If I was to visualize a channel out here, like if I was to draw a line from here to here, now this would be my resistance line for the bear channel. So I wanted to see it break above it. Right now it has got support from the 50-day simple moving average, which is at 42 point. Which is at 43.02, and our red line out here is at 43.42. So it's a narrow range in which there is this resistance. It has to break through above this and come out and challenge the 100-day and the 50-day, 100-day and the 150-day simple moving average. Then we'll see what happens. If it breaks through above that, then there'll be strength to it, or else it's likely to bounce back down and find support somewhere at 40.22. Then we look at Verve Therapeutics, which has been gaining steadily all the way since 29th of December. It has been gaining steadily. Let us see if there is any news catalyst out there for Verve. There is no new news catalyst. MACD is bullish. Momentum is also picking up. And the 200-day simple moving average is putting a stiff resistance for it, whereas the 50-day simple moving average is performing strong support in conjunction with the horizontal support at 22.47. So Verve is looking like it's in a strong wicket at this point of time, and if it manages to break through above the 200-day simple moving average, it will indeed be going to the next level. Intelia was down 1.49% on Friday, but since 28th of December it has been improving steadily, and it's in a mini bull channel within a bear context. So the overall it is bearish, and if you are to look at Caribou Biosciences, it's also in a bear channel. It's touching the bounds of the bear channel. So in the next trading week, we'll see whether we can break through above this. MACD is looking bullish, but momentum is giving up. So I'm thinking that we'll stay within this range and will potentially be supported by the 10-day simple moving average sitting at 6.94, which is this yellow line out here. Then if you look at Bluebird Bio, it was down 4.01% on Friday, and it seems that our bull channel support has not been able to hold on. We got support from the 10-day simple moving average, which is this thick yellow line out here, which is sitting at 7.67. That's what gave us the ultimate support on Friday. So hopefully we get back on top of this diagonal line of support, because there are more patients now enrolled, and their statements have shown that at least the sky is not falling before 2025. So there should be a bit of relief out here and a bit of risk taking, because SkySona has also enrolled its first paying customer. So I think Bluebird should recover a little bit in the next trading session. Editas is down 5.01%. MACD is bullish, but momentum is below average. Editas is looking weak. And so that brings me to an end of this technical analysis session. Some of our viewers and some friends do like me to do the technical analysis session, so I've done it. But I think that this analysis is going to be a bit of a fool's errand, because at the end of the day, there are so many dynamic factors, fundamental factors out there which are going to trump the technicals. Therefore, I think that at this point of time, we have to be keeping a close eye on the news, looking at Bloomberg and CNBC, as well as the politics that are happening, the geopolitical situation. Those are the things that are likely to shape the market. The debt ceiling is a big one, which will have a overall geopolitical effect in terms of the influence of dollar. So that's it, my friends. Please do let me know what you think of my thoughts and my strategies. Put your comments in the comment section so that I can understand where you're coming from. Thanks, my dear friends, and have a great weekend. I'll catch up with you again tomorrow. Bye for now.